All right, let's jump right in. This should be a quick update because everything is going as planned. So looking at SPY, we could go a bit lower and fill this gap at 497, and then I'm looking for a bounce back up towards this negatively sloping 50 EMA, which is going to be up here right around 507. Now, one thing I want to caution you against with gap fills is there is no guarantee we have to fill this gap. For example, Nvidia today got very close to filling its gap and then had a very strong bounce. So we could have the same thing happen at SPY. So don't assume we have to fill the gap now. We could bounce to the 50 EMA and then still come down later and fill that gap. But I think my expectation is that this gap will fill, whether it's a lower high bounce and then another lower low later, or we go straight down and then get the strong bounce. Either way, I think you should be preparing for this bounce because there's only a little bit more downside until that gap fills, but plenty of more upside to the negative 50 EMA. So down to 497 or bouncing immediately up to about 507, which will require the break of 502. And if we just continue to flush down below this lower Bollinger Band and we break 497, then the next support is down here below 492. Now keep in mind, we're now 4 days below this lower Bollinger Band, so every day we continue to close below it is only increasing the chances of a very strong bounce. But keep in mind that very strong bounce is still likely going to be a lower high within a downtrend because we currently have the lower highs and lower lows. On the NASDAQ 100 triple Qs, we were down 0.57% today. And again, we're following the arrow, which was down here towards 423. And then I think we'll get a bounce up towards 434 to 435. So again, I am expecting these to be very strong bounces, but even that is still going to be a lower high, which could still send us lower within a downtrend. Once we get the lower high, then we could still get a rejection and get another lower low. But I think in the short term, the expectation is a strong bounce. So there's a lot of reward to the upside and very little risk to the downside. So watch that support right around 423, and if we hold that support and start to bounce, you're looking for a push higher towards the 430s. On the Dow Jones, we were up 0.1% today, so we've now held 377 for 4 days in a row, which means there are definitely buyers at this level, and I think from this bounce, we are going to push all the way up towards 383 to 385. So that could still be a lower high rejection, as I've been telling you across the board, but if we do break through 385, we could have had the end of the pullback, and we're going all the way back up here to fill this gap below 395. So that would be a very large bounce, but we'll need the confirmation with the break above that resistance at 385. So we want to continue to take this day by day and step by step and not get too far ahead of ourselves. So in the short term, stable above 377 and look for a push into the 380s. On the Russell 2000 IWM ETF, we are flat on the day, only down about 0.08%, and we are holding this support at 193. But if we break 193, we're looking for a push lower towards 190. I think 193 and 190 are both very strong support levels. So there is the chance we don't break 193. But again, if we do, it would be a very simple retracement back to the rising 200 daily moving average, which is right there between 189 and 190. If we bounce from here, we're looking for the resistance zone between 196 and 199. On the ARKK ETF, we were down 0.26% today, and we're continuing to ride and close down below that lower Bollinger Band, holding that support at 42.5, and we do have the gap to fill above at 44.25. If we break above that gap, then we're looking for a push towards 45.7. On the VIX, we were down 1.15% today, and the VIX has now made a lower low for the third day, so we are continuing to crush down towards the price target at 17. And if we do get that really strong bounce that I'm projecting in the indices, we could see the VIX come all the way back down towards 15. Now keep in mind, this still means we're in a volatile market while the VIX is elevated above 15, so you can continue to day trade those ranges while we have the volatility. But if we start to get a bullish bounce, we should expect to see the VIX continuing to crush. And tomorrow is OPEX and VIX Crush Friday, so it could happen as soon as tomorrow. On Bitcoin, we're currently up 3.5%, so the bulls did hold that support right there at 61,000, which I told you I called the bounce or die level, because if we don't bounce from this support, we are going to see a very quick flush to 52,000. So right now, the bulls are trying everything they can to hold this support, and that could mean that we don't break down to 52,000. So remember, we need proof that this support is failing before we assume we're going lower. And the next resistance level we need to break is getting back above 65,000 and then 68,500. On Nvidia stock, we were up 0.76% today, and we did get very close to closing that gap. The gap is at 823 and the low of the day was 824 and 2 cents. And as you can see, that is the rising 50 EMA. And I told you from there, we could have seen the end of this correction, and we're going higher to a new all-time high between 994 and 1032. Now, Nvidia is without a doubt the market leading stock. So if it does go to all-time highs, we cannot rule out the bullish scenarios in the indices. So just continue to stay bullish above 823, and if we break down below it, get risk off, because it means we could be going to 780 to 740. Until we break that support, there's no reason to believe that it's not going to hold as a higher low within a bull trend. A shorter term price target would be up here at the top of the range, right around 900. On Tesla stock, we were down 3.55% today with another gap down open, and now we have another gap to fill right around 154. So we have a gap at 154, 161, and another gap down here at 146. So there are gaps all over this chart, and we are going into earnings next week. So this is definitely still a falling knife while we have these lower highs and lower lows. And if you don't mind trying to catch the falling knife, then you're going to be trying to do that somewhere between 146 and 148. If we bounce in the short term, you're looking for profit taking right around 154. And if we break above 154, we're pushing higher towards 159 and 161. On Apple stock, we were down 0.57% today. And today we finally hit the price target to the downside, which was the support right around 167. And over a week ago, we hit that price target and had a very strong bounce to the resistance at 177. And then we got rejected and came right back down to it. Now, one thing I want you to pay attention to is as Apple is falling down to support, we are seeing a huge reduction in volume. And essentially what this means is that we are running out of sellers the lower we go. And with every consecutive break of support, we see less and less sellers. So 167 is a very low risk opportunity if you do not mind catching a falling knife, which in a blue chip name like Apple, I know a lot of you don't mind doing that. But if we do break 167, we're looking for a push lower towards 163. So low risk entries between 167 and 163. But again, it's a falling knife, so you still need to manage your risk. And if we do start to bounce from here, you still have all of the resistance above at 169 and 172. So jumping back over to the S&P 500, this is still a market that has a little bit lower to go. But again, we're getting very oversold, and I still view this as a pullback or a correction within a bull market. So the lower we go, people will become more and more bearish. But if you remember, this is a bull market, so you never want to completely rule out the bullish scenarios, which is going to be the most common mistake that you see during a pullback or a correction. Is everybody that thought they wanted to buy the stock market when it was at all-time highs and couldn't wait for a pullback are now the same people that are screaming the sky is falling and are panicking, and they are too scared to buy the pullback. So you need to decide what fits your trade plan, but do not forget on the macro level, especially if you're looking at your weekly charts, this is still a very strong bull market. So manage your risk accordingly. This is still a short-term downtrend, which we need to respect. So even if we bounce, we're still going to assume lower highs and lower lows. And there's always plenty of time to react to price action. Remember, we couldn't care less if we're going higher or lower. We want to trade where the market is going, and we want to put ourselves in the best risk-reward ratios. And as I've been teaching, that is the only way to remain profitable. You have to look for those risk-reward ratios that favor a profitable trading strategy. That way your wins will offset your losses by monetary value, and that is where the profits are going to come in the long term. So just keep in mind what I said. I think there's a very strong bounce coming very, very soon. We just have a little bit lower to go at most. And of course, there's still the opportunity we don't even fill that gap before the bounce comes in SPY. So stay disciplined and be patient. This is still a very technically sound market. And very soon here, I'm going to reveal to you just how technically sound this market has been performing. So if you want to come crush this market and get access to all of my intraday updates and technical analysis, as well as my trade ideas, you can come join us over at the Stocks Channel Discord community. And you can find out how to join the Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.